born as born in 1982. I'm gonna be showing you something amazing in the market, and mind you, I'm not an financial advisor. I'm just helping a lot of traders. I'm just helping a lot of people. Maybe I might help someone in your family who doesn't actually understand certain things in the market. I always give out signals, I always give out analysis based on how the market is going to react in the upcoming months. I've always been so good on analysis that actually predict the movement on a monthly, weekly, daily, and so on scale that might help anyone. So okay, guys, right now I'm opening, looking at the dollar index. Let me try to put it like this so that you guys can see the pair that I'm looking at and what time frame I'm looking at. I'm looking at the dollar index from a 1 hour time frame. Well, the dollar index controls all the dollar pairs and all the pairs that are paired to the dollar. So right now, I'm gonna be helping you with the direction of the market. It's on a monthly time frame. It's gonna help a lot of people know why the dollar is rising, know why the dollar is gaining energy, power, and everything else. Um, the market depends on technical trading. A lot of traders find it very hard to accept that the market depends on technical trading, but it is true. And all fundamentals depend on technicals. Technicals that the market analysts see are taken out, then many fundamentals are created out of it. So okay guys, we're gonna be looking at the dollar index at current market price. As you can see at market price the dollar index is rising. I'm looking at this point of the market. You can see the dollar index is rising. This is not so good for our economies, guys. If you're in the USA or if you are trading, if you're a trader, it's good for you because each and every time the dollar rises, it means that its price or value rises. It gains more value in a way that when you withdraw your monies, it's gonna be so good. It's gonna be a lot of money for you guys. But then for our economy as South Africans, I know this video is not gonna be seen by South Africans alone, but as our economies, it's so bad because everything is going to be very expensive. First of all, let's look at this time frame. Let's look at this video from this time frame of the market. This is the 1 minute time frame. Sorry, 1 month time frame of the dollar index. I'm gonna be looking at the market structure as to how the market is going to move. So this has to be our current formation high of the market. This is the market high, the ever reached level of the market high of the dollar index. So we're going to be looking at how it's going to impact in the upcoming months. If the dollar index doesn't change its direction, it keeps on buying for the upcoming months, then all the economies are in danger. This is where you'll see that many economies will suffer inflation. There will be a lot of increase on pricings of a lot of things in many economics, and this is really going to be really bad. So first of all, I'm going to be looking at the market structure. As you see, the market has been selling from this highest level. And you see the market was been selling from this highest level. Why am I looking at the market structure? I want to get the right direction of the market. I want to predict how the dollar is going to move for the upcoming months or upcoming years. As you can see, I can start marking the market as this is the lower low of the market. So I'll also mark the points so that I have my points valid and clear. I want to have my points valid and clear. This will be the low of the market, the peak formation low of the market that we see. And then we see a continuation through a break in market structure. At this point, we see a continuation becomes the new low of the market. Remember, I'm marking every point that I see in the market so that it doesn't confuse a lot of you guys who will be looking at this video. This is a good video for everyone. Maybe you guys can know how to trade. Maybe you guys can understand how analysis work on the market without people giving you the wrong prediction about the market that will make you lose in the market. So we're going to be looking at this level as the peak formation low of the market. Current peak formation low peak formation low of the market, and we're going to be looking at the market changing structure for buys. So you can see this is the lowest point at this level. So it means this is not the peak formation low of the market. I just assumed the peak formation low of the market will be this point, which is at its lowest. This is the peak formation low of the market. So I'm also going to mark it so that you guys don't forget about this peak formation low of the market. So you see the market has been falling, but as the market has been going down, there was something different about the market where it actually broke structure at this point. We see a break in structure at this point, but then the bigger picture is that the market is very bearish. This is the bigger picture of the market where the market started selling, came down to this point. This is the bigger picture of the market. So as we're looking at the bigger picture of the market, we see that the market has sold. We see that the market, first of all, this is a minor movement in the market. The market counteracted as two retests on a high level. Why? They were now losing their bearish momentum within a buying zone, within a buying level of the market. Mind you, this level has also been broken by the market where we saw a continuation to the lower direction. This break, this is the low, was the lowest point of the market before the market has broken at price level, at this price level. So I'm teaching you something new, guys, on how to analyze. You have to be very sure about your analysis. If you can apply this on how to analyze in all your time frames, then you are definitely a dangerous trader. So we see the market has been pushed down en route to this level. It created a new low as soon as it broke this level. As the market created a new low, it went up. When the market went up, it went to an imbalance zone. This is the imbalance zone of the market that we see it moving into. This imbalance zone of the market has been respected more than twice. It has been respected more than twice. We see the market being pushed to the lower direction at the first respect. It had to break the low to create a new low. As it created a new low at this market price, realize that the market goes back upwards, goes back straight back into the imbalance level. But before it left that low, it created what they call order blocks. And order blocks that had been respected from a monthly time frame. What do you expect? You expect the market to take profit above price. Where the market took profit above the price, then we see a continuation in the market movement. So guys, this is just an education about structure and also to help people understand why the market is actually buying and why the market will sell or why the market will suffer certain uh, things in the future. So okay guys, this has to help a lot of you guys understand a lot of things in this trading market. So this was our high of the market. So I call this levels high high magnet. I call them the high magnet levels. They actually call out for the market to come back and retest at that level before the market leave for another direction. Well, the market comes to this level, as you can see through rejections. I see a resistance zone at this price of the market. So alright, rest for resistance. The market comes back to this resistance. This is where the retest has to be taken in the market. We see retest in the market. We see a push in the market price, which went below price. This is where we saw the market creating what we call equal lows in the market. The equal lows have been created in this level. So I'll write EQL in the market. EQL in the market represent or tells us if the market dares to bounce back and go to the upper direction, it will come back down. It's more like equal lows, as in double bottom in the market. Also come back to this level, which is a resistance level. But at this resistance level, something that we realized that before the market created that resistance level, we had what we call an order block at this price of the market. The market was pushed down to create a new low. As soon as the market was pushed down to create a new low, we now see something we call a change in market structure. This is the real change in market structure. How do you know that this is the change in market structure? Why is this not a change in market structure? This is the question many traders ask themselves. But professionally, you have to trade different from other traders. Know your game. This would have been a change in market structure, but since I know the rules of um, momentum in the market, I will always know that the market has to correct. The market has to correct at all times. The market had something at this level. It had candlesticks which seemed to be confused. There were many candlestick, a green red candlestick. This level has to be respected before the market changes its structure. And the first respect for this level was at this zone. We see the market pushing to the lower direction. As the market pushing to the lower direction, what do I see? The market creating a new low, which I marked. Mind you, as the market was going down, it always created, um, after creating the lower low, it created, after creating this lower low, it created a lower high. And we can see at this point, we also have another level which is created from this selling market. This was a selling market from a lower picture, from a micro picture. We see that the market was selling. But as soon as the market broke this level, the story now changes. We believe now that the market is going to be selling, is going to be taking its bias. This level doesn't actually represent a change in direction. As soon as this level was broken, there was a mini change in direction. It was not the main confirmation of a change in direction, but we saw the market pushing up higher. As the market pushed up higher, we realized something. It creates equal highs or double top at this level, showing us the market is still gonna revisit that level. For sellers, as those have been deceived, they thought that they're going to sell at this level. The market took that level and started selling. Why did the market start selling? We have an imbalance in the market at this level. This imbalance level pushed the market a little bit lower. Why didn't the market sell below? Because the rules of the imbalance says the market will always mitigate and sell or buy to the level where it started mitigating from. The true story behind this is that we have a break in market structure now. The only thing we're going to look at the market going back inside to fetch momentum to push the opposite direction. As soon as the market went back inside, we see the market touching our our support level at this point, which was within an imbalance that was left behind. The market buys, does the same thing, come back to this level. What did we leave at this level that the market doesn't have to start selling? We left what we call an order block at this level, which the market came back to respect, and now the market is buying hard. What is our target in the market? So our target in the market is this level. Is this level, then we'll see a push to the opposite direction. This is just my uh, analysis or my teachings for you guys for today based on the dollar index. This is a great education on how to identify the market structure and how to catch the momentum of the market. It's your boy Nesborn and A2 guys. You know what it is. We're going high, guys. This is the help that you always wanted. Thanks, guys. Let's get started.